Hello everyone, this is Terry with Futures.io, and as always, I would like to thank you for joining us today. It's my pleasure to welcome back GruttePier for today's webinar, Another Afternoon with GruttePier. This is a special webinar series where we sit down with a member from FIO and learn about their trading journey and experience. Throughout the webinar, if you have a question, please feel free to type them into the questions box. We'll do our best to answer them at the end of the event. This webinar will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching this after on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. And now, without further delay, I'll hand it over to Groot, and you'll get the pop-up to share your screen again. All right, looking good. She's all yours.
Yeah. Hey, Terry. Thanks. Well, it's a pleasure being here again. It's been 4 years already since the last webinar, so time flies. Let me see. Okay, for those who do not know me, my name on Futures.io is GruttePier, and my real name is Jarno. I live in the Netherlands. I'm journaling on Futures.io for something like 5 years already. I post all my trades, the good ones, the bad ones, charts, my thoughts, lessons learned, everything. So my complete journey is there. It's for all to read. I have a full-time but also a demanding job. That means that I cannot trade whenever I want to. It's very frustrating, but it is what it is. Priority is at my job. I try to do a couple of trading sessions, live sessions per week. And when I cannot trade live, I'm market replaying so that I keep learning, sharpening my skills, and gain screen time. I received various questions about my trading. So when I was asked by Terry and Mike for another webinar, I decided that I'm going to tell you how I trade, what I do. So that's what I'm going to do in this webinar. So in general, my trading style, I start trading 30 minutes after the open, and I trade for 1 to 2 hours max. I like starting 30 minutes after the open because the unpredictability of the opening action is gone. There's already a little structure in the market. There's volume, I see from my stats that this is the moment in a trading session when I'm at my best. And then after 2 hours in the US, the lunch starts, so volumes drop. But most importantly, dinner starts in the Netherlands, so it's family time. So after 2 hours into the session, I'm done. I try to catch the intraday swings, so the highs and the lows. So that means I enter and exit on price levels that I consider important. I base my timing on momentum, so I look at tick, volume, and the tape, the time and sales. And I have a trading plan for each session, so all my trades should fit within this plan. So let's have a look at the charts first. I use a point-of-figure chart for determining the midterm trend and what's going on there. I replace the X's and the O's with a bar, so I find this easier to read. And this chart very clearly shows the tops and the bottoms, so I can determine if it's trending or not, if it's consolidating or not. So I use this one for my market preparation. This is the chart that I trade from. It's a volume chart. I like volume bars above time bars because you can see the movement of price much clearer. If you compare a time-based 5-minute chart, for example, with a volume chart, then you see right away what I mean. So volume bars, I also have various levels plotted on there. First one is the opening range. It's a 5-minute opening range. That's the blue box. I have yesterday's high, low, close plotted on it. Floor trader pivots. I look at VWAP, the daily, the weekly. And for the daily, I look at the ETH and the RTH. I look at the daily range. I use a 14-day daily range, and I also use the ATR to determine the volatility. I'll get back on this later in this webinar. So I don't use any indicators like stochastics, RSI, whatever. In basis, I'm only looking at price and volume. Another chart I have is the 1-minute chart, and I have volume and tick plotted below. And I use this chart for looking at the momentum. So I'll get back to that later on, but I like to see increasing volume. Since I'm using a volume chart, it's difficult to determine. So we use a 1-minute time chart with volume plotted below. If we have a look, I'm not sure if you can see my mouse, but the red line in the volume chart is the cumulative volume. So in this example, it's at 89%. So that means that volume is slightly less to what it is on a 14-day average. I also look at volume peaks. So you can see that on the right is currently at 234%. And below that is the tick market internal. I'll get back to that. So this is what I'm using in my trading. So when I have it all on one screen, this is what I look at. No indicators, only this. I also have time and sales plotted on the right. And basically these are all the tools that I use. So if we look at how price moves, I guess we all know that price moves between levels of support, support and resistance. I marked it here on the chart, so you can see there's a support and resistance level that extends to previous session. There's also one here. It's overnight. You also see price responding to like VWAP, like the SD bands, like the opening range low and the pivot point. And that's not a coincidence. And the more you look at these levels and these charts, you see that people respond to that. If you plot volume below it on a time-based chart, you can see increasing volume. And so people look at this, and the more people look at it, the more important the level is. So if levels come together, like in a confluence, it's even more important. So we have, for example, we have yesterday's close, we have the opening range high, we have some overnight swing points, we have 35 even coming all together, and these are the levels that I like to take my trades. So as an example, if price gets to an important level, what's it gonna do? In this case, price approaches VWAP, and in my view, it can do three things. It can push through, so it can go down, it can go sideways and starts chopping, or it can bounce off. It's these three things what that can happen. Reality is we don't know what's going to happen. Each situation is unique. It depends on the technicals at that moment, the market participants at that moment, It's a macroeconomic situation. It's news that's ruling the day. It's elections, oil prices, tensions between countries. Anything can happen. News can come out. Institutionals can decide to buy or to sell. HFT bots can go crazy. So in my view, my opinion, you cannot take a rule-based decision on what to do here. And for example, always go long in this situation. It's not going to work. And each moment is unique and depends on what the participants are doing at that moment. And so that means that each opportunity, it needs to be assessed at that moment. I do that with the following. Firstly, I look at does the potential trade, does it fit in my plan? At the start of each session, and I post it in my journal, I do my market preparation. Over here I have an example. And during my preparation, I saw that price is trending upward in the midterm. So it's a multi-day period with some consolidation. Overnight, it was ranging sideways. Since the open, price has continued ranging. The volumes are low. There's low volatility. I use ATR for that. Overall, it's a slow day. Price movement feels slow. It's also a Friday. So for me, that makes that my bias, my hypo for this day was, this is a range day. And when it's a range day, I'm primarily focused on fading the range levels, so the outer limits of the day, so to say. On trend days, I will be looking for pullbacks and breakouts. So in this case, I would do nothing. I would just let this opportunity pass. But suppose this potential trade, price coming towards VWAP, suppose that it would fit in my trading plan. And suppose that my trading plan was looking for shorts this session. If price approaches VWAP, and I'm expecting or wanting to see price pushing through, I like to see the following things. I like to see peaks in volume in the direction now I like to see increased volume on red bars. So for example, the last bar, I want to see increasing volumes, but also in earlier bars, there are a couple of big red bars. I like to see that there's increased volume. Ideally, more than 200% RVOL. So there's clearly increased volume. What I mentioned, when price approaches VWAP, I also like to see increasing volume. I like to see that tick is bearish, so that most of the stocks are making down ticks. I'd like to see increased activity, so that you see the transactions on the tape are increasing. On the chart, I like to see that the movement of the bar is increasing. On the tape, there are basically two scenarios in my experience. What can happen is that either sellers are stepping in, so you see big sell transactions on the tape, and I see price respond to that. Another situation is that when price approaches VWAP, in this example, you see a lot of big buy orders on the tape, but price is not moving. So that's an indication that all buy orders are being absorbed by the sellers, and then eventually there are no more buyers, and then you see price moving down. So all in all, it should feel like price is going down and it's unstoppable, and that's when I enter. Another scenario is suppose my trading plan is that I should take a long here because I'm expecting movement to the upside, and then I'm looking for a bounce of the VWAP. In this situation, what I like to see is I also like to see volume peaks, this time on moves up. But I like to see decreasing volume as price approaches VWAP. And so you see less interest of buyers. Tick, ideally it should be neutral. But it's even best if once price gets near VWAP that you see tick getting bullish or very bullish. So that's a clear buy signal. And the tape, there are basically three scenarios. I should either see buyers stepping in and price responding to that. Another scenario is the tape remains quiet, nothing happens, it's boring. So that's a scenario what I like to see. Another scenario is there are a lot of sell orders appearing on the tape, but price is not moving. So all sell orders are getting absorbed. Then eventually market runs out of sellers and then price jumps up. And so all in all, this scenario of price bouncing off VWAP, it feels like dull, like momentum is gone. So if that's happening, then I enter long and for the bounce. Both scenarios are never all as good as I just explained here. It's either it's only clear on the tape, or it's only visible on tick or in volume. It also happens that I just don't know. I don't see any clues. In that case, I let the trade, I let the opportunity pass. And so I only take the trade when I see confirmation in tape, tick, or volume. So I have various setups around that. Most of my setups are around the opening range, VWAPs, fading levels. So the point is that whatever setup is there, it should be part of my plan for that day. If it's a range day, I'll be looking for fades, and these are the range levels. And my final confirmation for taking a trade is I look at the volume, tick, and the tape, what I just described. I let the opportunity pass when I do not see any confirmation, or when I don't know, or when price is choppy, or when it's just like today, it's a news day. I don't trade. And also there must be, if I take a trade, there must be potential. So if price moves my way, it must not immediately run into resistance, like a VWAP or 35 even, or another important price level. Yeah, regarding my money management, I trade the micro ES, by the way. I'd like to trade 2 or 3 units, so I can scale in and scale out. And my unit size is based on the volatility. Again, the ATR. My stops are also volatility based. I typically have a stop of 3 to 5 points. I used to be all in type of guy. But a couple of months ago, I started experimenting with scaling in. So I, on the first sign in volume, tick, or tape, I enter with one unit. And when I see price going my way, I enter with a unit 2 and a unit 3. I have 3 profit targets. First profit target is fixed, so it's somewhere in the range of 3, 4, 5 points. Then I move the stops of the remaining units to break even. And profit target number 2 is at the next important price level. So suppose I entered at whatever VWAP. The next important price level is a pivot point. I take my profit there. And the third one, if I'm in with 3 units, I use that as a runner. So putting it all together, if a session starts, I start with my market preparation. So I look at the news. Is there any news scheduled for this day? Like last week, we had the elections, so market was nervous. I look at the context. What's midterm doing? Well, it's trending up in this case. I look at overnight. What did price do since it opened? I look at RFL, look at ATR, and then I determine a strategy for this session. But during my trading, I keep a log, so I document all my thoughts, everything that I'm doing, and this helps me in remaining objectively, and also knowing that I post this in my journal. It helps it keeps me sharp. Yeah, I don't know to which extent you guys are reading this, but it's everything that I think of at that moment. When I'm done trading, I do a short recap or evaluation. I update my statistics, and I post it. I post everything in my journal. I have a couple of examples here of a couple of trades. This was a trade of, I believe, last week or earlier this week. My bias was that it was a range day, so I was looking at the opening range high, which was confluencing with yesterday's close. So when price got there, apparently I saw some indications, clues in either in tick, volume, or the tape. I shorted it, took a profit. I got stopped out at break even on the second unit. I re-entered, took a profit, and I made a couple of more entries. So this was a nice day. This was not a nice day. Again, my bias was a range day, so I marked the levels. Apparently, I thought price would bounce off, but it did not do that. So you can see I took a small loss here. Another example. Apparently, my bias was that it was a trend day. So I had an entry level in mind here at where yesterday's high, yesterday's close, an opening range low come together. So I took a short here, and I noticed on the chart you can see here that tick was bearish. There was little volume, so that made me decide to enter short. Then something happened, maybe news or whatever. Price jumped out. I got stopped, and I stuck to my bias. So I took a re-enter. I re-entered short here. Took a profit at these levels. So all in all, it ended up in a nice trade. Well, this is an example of where I screwed up. So looking back, it's always easy. I was trading in the middle of chop, should not have traded at all. I also increased my stop size, so this was a bad day. Yeah, so wrapping it up. This may look like a method that's ready to go. Reality is that this took me about 4 years to create this and to feel comfortable with this. Also, I'm sure it will be slightly different in 6 months. I'm still learning and evolving myself. Screen time is very important to get a feel for the market, especially for volume, tick, and tape. That takes time, and in time you will develop a sense or a feel for the market. Sometimes I just know something is going on, or if something is weird, or whatever. I cannot describe it. Sometimes it's also not visible on the charts yet, and I think that only comes with screen time. I know my method works for me as long as I stick to it, and if I do not stick to it, then I will lose. A couple of months ago, I stopped journaling. I was extremely busy at my work, so my head was not clear. I instead of trading 30 minutes after the open, I started trading in the afternoon. I was not successful, so I went back to my method, started journaling again, and immediately everything goes well. So what I learned here is I just should not deviate from what I've been doing past couple of years. Another thing is each month or so I made small changes. So I've never made any big changes. So the switch from all in to scaling in, it might seem like a small change, but in trading, it feels like the whole world is upside down. I should really learn to do that without affecting all the other elements of my trading. So in my opinion, it's key to make small changes. And I'm also a believer that it takes at least 20 days to make new behavior to make that your own. So small changes. Deliberate practice, that's another thing. Everybody does it in all professions, like soccer players, tennis players, pilots. Everybody is practicing. So Rory, another member of Futures.io, he had a discussion with him. So what I did, I selected 20 scenarios, 10 scenarios where price would, I believe this was concerning VWAP, 10 scenarios where price pushed through VWAP, and 10 scenarios where price bounced off. And I market replayed these scenarios on speed 1, 15 minutes before the move and 15 minutes after the move. And I only watched that R-fall, tape, and tick. And this actually was very, very valuable. So I can really advise everybody to, do these kind of stuff. Just practice. Well, journaling, obviously, it has helped me a lot, and it still does. Yes, apparently I need to have the idea that people are watching. It keeps me sharp and objectively. So, Also received a question from MLog. So why are you not automating? I'm an IT specialist by profession, so I have the skills. Before I started my journal, I've been developing and testing strategies, automated strategies, for a couple of years, but I never was successful at that. And so I switched to discretion, and that works for me. I have nothing and no one to blame except myself. And I drive a Tesla, by the way, and in the Netherlands the roads are very clean. The Tesla has an autopilot; it can drive itself. But despite, in small villages, I always have to intervene. And so there's always a situation that has not been thought of. I think it's the same with trading. So far, I've had no luck with trade automation and thinking of every possible situation. And so it's better to do it yourself. Also, it's much more fun. I find trading very relaxing. It takes my mind off work, and I really love it. It's what I want to do when the market is open. Well, okay, this is what I have to say, Terry. Yeah, maybe there are any questions.
Okay. If you have any questions, please feel free to type into the questions box, and I will ask them to Groot. Let's see. Okay, there's a long one, so give me a second to try to parse this. He says, regarding scaling in, and this is not a criticism, I believe you said that you entered one contract and see if it becomes profitable. If it does, you then add 2 and 3. Why not make mental notes of your original entry, then watch the action as you do, and then enter all 3 if it goes in your direction? While you won't have the unrealized profit of the first contract that you do today, you will avoid taking the losses on that one contract when the market does not go your way, as you also do today. Thanks for your presentation again, and I'm just trying to understand and not criticize.
Yeah. So the base, if I understand, Terry, the question is why I switched to scaling in.
Yes. Why do you scale in instead of all in and then scale out?
Yeah. I used to be scaling. Used to be all in. That worked very, very fine. But when I scaled in, I noticed that my average losing trade was much lower, because this method just doesn't work all the time. So when I go all in, I lose on all 3 units. So I have a max loss. And if I scale in and it does not work, then I only lose on 1 unit. And of course, this goes. The downside is that yes, I lose a couple of points on units 2 and 3. So that's true. Yeah. But all in all, looking at my stats, the scaling in, it's better for me. Works better for me. Yeah.
Okay, thank you. I'll give him a couple more seconds for some questions. I know you talked in one of the comments. You said something about you had stopped journaling for a moment. How important do you feel like the journaling is to your trading in your journey so far?
Very, very important. Yeah, it's. I started 5 years ago, and because I did not know what to do. I did not know what method. I was following Al Brooks a little. I was unsuccessful at that. I did not know how to change that, so I started to journal. And I had in mind, whenever someone steps in and gives me advice, no matter what, I'm going to follow it up. And after a couple of months, Ed stepped in Inlet Cap. He's well known on the forum, and he said, "Well, you should focus on price levels, and you should do this and not that." So I followed up on his advice, and that somehow caught his attention. So he kept giving me advice, and if you go all the way back in my journal, you can see that almost immediately my results changed. It's I won, and a couple of months later I made my first 20-point profit, and from then on it has taken off. There have been various good and discussions with other members. There have been a couple of situations where I somehow lost my edge, and then it was some small tiny comment I believe it was from Grant X or Tap In or someone else. I'm not sure anymore. But he said, "Hey, you switched to breakouts." It was a small comment, and then it triggered me, and I knew what to do, and I realized that I deviated from my what I've been doing all the time. So I was successful again. I stopped journaling a couple of months ago. I felt, what's the use of journaling? I no longer get feedback. So why am I doing this? And I wanted to step up towards trading more live. So I decided to stop journaling. And what happened when I stopped, I somehow lost the accountability aspect. I only traded live, and I stopped market replaying. So I only traded once a week, maybe twice a week. Work got busy. I started trading at different hours. So it was a mess. So I believe in August or September or so, I gave myself a break, wait till work was back to normal. And then a couple of weeks ago, I went back to what I did before, back journaling, back trading only in the time, the 30 minutes after the open, no longer in the afternoon. And I'm right on track again. Yeah. I hope this answers the question. So yeah, is journaling? Yes, journaling is very important for me. Yeah, so definitely. Yeah, I can advise it to everybody. Yeah.
Awesome, thank you. All right, I don't see any other questions. Thank you for the webinar and information, and for spending some time with us this evening.
Yeah, I'm happy to. Thank you very much, Terry. Bye-bye.